There's a company that manages $14 trillion. Let that sink in. That's more money than the entire economy of almost every country on Earth. Bigger than everyone except the United States and China. If this company were a nation, it would be the third richest on the planet. It's a major shareholder in nearly every big company you can name. Apple, Microsoft, your bank. And it runs a piece of software so powerful that hundreds of other banks, funds, and even governments quietly depend on it to manage their own money. And yet most people have never once said its name out loud. It's called BlackRock. And this is the story of how it became the most powerful force in finance. Not by owning the world's money, but by becoming the machine the world's money runs through. Here's the strange part. How do you become this powerful, the invisible spine of global finance? While most people have no idea you exist. BlackRock's power rests on 3 pillars. And once you see them, you won't look at the financial system the same way again. But there's also a huge myth about this company I need to clear up before the end. Because the truth is actually more interesting than the conspiracy. Let's build it. The scale. Start with the origin, because nobody expects it. In 1988, a man named Larry Fink and 7 partners started BlackRock in a single rented room, 8 people, and their pitch wasn't glamorous. They were risk managers, obsessed with one boring question: how much danger is actually hiding inside a portfolio? That obsession is the whole story. Hold on to it. Now fast forward. At the end of 2025, BlackRock closed the year with a record $14 trillion in assets under management. In that single year, clients handed it a record $698 billion in net new money, the biggest inflows in the company's history. Revenue jumped 19%, $14 trillion. From one room, in under 40 years. So how does managing all that money actually make BlackRock rich? That's Pillar 1. Pillar 1, the money machine. Here's the thing about BlackRock's business. It looks almost too simple. It charges tiny fees. On some funds, as little as 0.03%. On others, up to around 2.5%. And 0.03% is basically invisible. 3 cents on every $100. On its own, a fee that small is nothing. But run it across $14 trillion, and nothing turns into one of the most reliable money machines on Earth. And here's the part investors love. Roughly 90% of BlackRock's revenue is recurring. It doesn't have to go win it back every year. It just keeps flowing in, quietly, as long as the money stays parked. A huge chunk of that comes from one product line, iShares, BlackRock's family of ETFs. Those are the funds that let you buy a whole slice of the market in a single click. And iShares alone controls roughly a third of the entire global ETF market. Not a third of BlackRock's funds, a third of the whole world's ETFs. Tiny fees, gigantic scale, on autopilot. That's the cash machine. But honestly, it's the least interesting source of BlackRock's power. Because Pillar 2 is the one almost nobody sees. Pillar 2, Aladdin, the twist. Remember those risk managers in a single room? This is where that obsession pays off. BlackRock built a piece of software called Aladdin. On the surface, it's a risk management platform. It watches portfolios, models what could go wrong, and stress tests trillions of dollars against thousands of scenarios. But here's what makes it extraordinary. Aladdin doesn't just run BlackRock's money. It runs everyone's. Right now, Aladdin performs analytics on roughly $21 trillion in assets, significantly more than BlackRock's own $14 trillion. Why more? Because hundreds of outside institutions, rival asset managers, banks, insurers, pension funds, pay to use it too. They plug their own portfolios into BlackRock's brain. Analysts even have a name for this. They call Aladdin the operating system of global finance. Think about what that means. When Windows runs on most of the world's computers, Microsoft has a quiet kind of power over all of them. Aladdin is Windows, for money. And almost nobody outside the industry has ever heard of it. That's the twist. BlackRock's deepest power isn't the money it manages. It's that a massive slice of the financial system now sees the world through BlackRock's software. Pillar 3. The ownership. Now the third pillar. And this is the one that fuels all the wild theories. Because BlackRock runs the world's biggest index funds that automatically buy a little piece of every company in an index, it ends up holding shares in nearly every publicly traded company in America. Not a handful. Nearly all of them. That makes BlackRock a top shareholder across almost the entire US stock market. And shareholders get votes, a say in who runs these companies and how they're run. Scale, software, ownership. Stack those three, and you get a company woven so deeply into the system that if it disappeared tomorrow, the machinery of global finance would seize up. So here's where a lot of people lose the plot. And I need to be straight with you, because this is exactly where the internet goes off the rails. The nuance. Critical. You've seen the headlines. BlackRock owns the world. BlackRock secretly controls everything. Here's what almost all of them get wrong. BlackRock does not own that $14 trillion. It manages it for other people. That money belongs to teachers' pension funds, to retirees, to ordinary savers with a retirement account, to sovereign wealth funds and governments. When you buy an iShares ETF, that's your money BlackRock is holding, not the other way around. Legally, BlackRock is a fiduciary. It's required to act in the interest of those clients. It's a manager of other people's money, not a puppet master pulling the strings of the world. So the cartoon villain version? Mostly wrong, but, and this matters, that does not mean there's nothing to worry about. The real concerns are quieter and a lot smarter. 1. Concentration. When just a few index fund giants are top shareholders in almost every company at once, ownership of corporate America gets funneled into very few hands. Critics argue that can soften real competition and hands enormous voting power to a tiny number of players. 2. Fragility. If Aladdin, the operating system so much of finance runs on, were ever hacked, broken, or simply wrong, the damage wouldn't stay inside one company. It could ripple across the whole system at once. When everyone runs on the same brain, everyone can make the same mistake at the same moment. Those are the debates actually worth having. Not BlackRock owns the world, but what happens when this much of the financial system depends on one company? So step back and look at what BlackRock really did. It didn't get powerful by buying up the world. Anyone with enough money can buy things. BlackRock did something subtler. It became the company the world's money flows through. The one that manages more of it than anyone else. The one whose software everyone else quietly runs on. And that's the lesson hiding inside this whole story. The most durable kind of power usually isn't the loud kind, the biggest building, the flashiest brand. It's the quiet kind. The kind that becomes the thing everyone else depends on, and then fades into the background so completely you forget it's there. BlackRock's genius was never owning the world's money. It was becoming the operating system that money runs on. And the most powerful companies of the next few decades? You probably won't see them coming either. They won't own everything. They'll just be the invisible layer underneath everything. The part you never think about. Right up until you can't function without it. So the next time someone tells you a company secretly runs the world, ask a better question. Not who owns the most, but who does everyone else quietly depend on? That's where the real power hides.